Hello everyone, I hope all of you did your paper well, and here is a quick recap of the answers for the MCQ part. That is what all of you would be waiting for. Pretty straightforward, right? The first case study was related to our buyback of securities. Similar questions are there, multiple questions are there in the study material as well. So from there they have picked it up. Now there they have said in one scenario loan is 300, that is what they want to do, and another scenario the loan is 350. That these are the two questions. Now as you solve it, you'll figure out that 350, 50% of 350 is 175. So here buyback is not possible. In the second scenario, 300, and out of 300, 150 will be the half amount and 24 can be reduced. So that 24 will divide by what? Will divide by the buyback price plus the CRR amount that we will be transferring. So when you divide that, the number of shares that you get will be 6,000. I hope my calculation is correct. If at all you have any other number in your mind, please feel free to put down in the comment section. I'll be more than happy to correct me because I was also doing it in a rush. Okay, so 6,000 is the number that we get, and after buyback the equity share capital comes to 3,90,000. Now this was one question where either all your options will be right, or if one is gone, everything else will be gone. So I got 39 lakhs for the first one. If it is 350, nothing can be bought back. That can be bought back if the loan fund is 300 lakhs, again 6,000. So this is common. Now here they have said a number of shares that can be bought back according to the decision made on the basis of two questions. Now which two questions? Okay, is it question number 2 and 3? If it is 2 and 3, you cannot have two different questions. So here we have to wait for the answer. Either it will be nil or 6,000. Okay, because it is not very clear which two questions are they talking about. Maybe some of you might have got another set of questions where it is very clear which two questions they are referring to. All right, then this is a theory question. Directly you can do it, 1/10 of the paid up capital and free reserves. Then second one is segment test. Again a straightforward question. If you had the conceptual understanding, it was easy, but yes, calculation would have taken a lot of time. Okay, me using Excel also took a lot of time. So with manual calculation, definitely yes. So you have revenue given. So you total up the revenue and calculate 10%. So 10% becomes 30. So these three becomes reportable under the revenue test, that is P, Q and T. If you look at the result, see, looking at the question itself, this loss is only for one entity, so that you can ignore and you can just consider the profit for remaining entities, that is 50 lakhs. Okay, so 46 plus 4, it is 50. So if you consider 50, if you consider 50, 10% becomes 5 of 50, and accordingly we will choose what are the segments to be reported. Then coming to asset, again total is 350. Based on 350 we will see how much is to be done, 35, and accordingly you will choose the answers. Okay, so the answer for me as per my working, for first PQT, PQT, PT and PNQ. So here either 8 out of 8 straightforward, or if you made one or two mistakes, it could be a problem. Case scenario number 3, scenario is long, and that is why I always suggest the students to look at the questions first. And friends, if you are happy with the solution, if you are liking this video, do like the video and do subscribe to the channel, right? First one, as per AS 26 intangible asset, what is the treatment for publicity research expenses? Will not capitalize, so straightforward 18 lakhs will be debited. Then in March 25, what will be the amount of the deferred grant debited when the grant of 30 lakhs is refunded? Now, if 30 lakhs of grant is refunded, how much is the machinery grant? Machinery grant is 40. Okay. Now, machinery grant is 40. Out of that 40, divide by 4 years, 10 you would have transferred to the P&L. Balance is 30. If you refund 30, that is what they have said, right? The amount refunded is 30. 30 lakhs was for purchase of machinery was refunded. So 30 lakhs when it is refunded, entire 30 lakhs will be debited to the grant account. Okay. Then grant in the nature of promoter's contribution, it has to be taken to capital reserve. You cannot distribute it. So 2 and 3 is the correct option. Then this is a very straightforward question. 10 lakhs plus net of 1 lakh, 11 lakhs. 11 lakhs and 1425, 325 becomes the actual return on plan assets. Then plant they have constructed, initial operating losses will not consider. Interest paid to supplier for deferred credit, again we are not sure whether it is qualifying asset or not. If you ignore all of that, you get 61,85,000. I think I missed this part. Net borrowing cost to be capitalized. Let me just quickly do that for you. This is done, publicity is done. Okay, so borrowing is 30 and 20, 50 lakhs, right? So 30 lakhs is used for factory building and machinery. Machinery, if you assume it's ready to use, only factory building is there. And construction of factory building and installation of machinery was completed on 31st of March. Total interest is 550. So 550, 60%. If you consider 550 into 60%, based on the two things, 330 is the amount I get. A quick calculation, I'm getting 3,30,000. 13 ka B. Correct. It is not treated as considered as deferred income. That is also right. Okay. In a hurry, I put 2 and 3. 1, 2 and 3 is the correct answer. Everyone is saying it is 7.5 lakhs. Which one? This one. What will be the amount of deferred grant debited when the grant of 30 lakhs is refunded? This one is 30 only, no? Because you got 40. Out of that, you would have transferred 10 to the P&L. 13 is B. I corrected it. Sorry, my mistake. 13 is B. Okay, so 30. Yes, installation machine. Oh, okay. Wait. 30. It should be 40 then. Third April 22. Okay, bank loan of 50 is fine. 1st of April. Construction was complete. Oh, they have not given clearly when did they start. So we assume that loan was taken on 1st April and that's why I calculated for 1 year. Okay. 30 is only right as far as I am concerned because see the dates are not very clear. They got on 3rd April. Okay, installation of machinery was completed on 31st of March. And if no depreciation is charged, then entire 40 lakhs has to be debited. 40 lakhs is not there in the option. Yeah, 39 lakhs after buyback. That's what I did, no? First question. 39 lakhs after buybacks. Correct. So, for equity share capital, you can see here, under the debt option, you can buy back only 6,000 shares. No, why are you doing 30 by 4? Yes, it is 39 lakhs only, pakka. See, if machine was installed on 31st of March of 25, again I am saying, if machine was installed on 31st of March of 25 for this question, where is this? Okay, 40 lakhs is the grant. Okay, 40 is going to the grant account. 40 is the grant account. Okay, out of this, if you charge 1 year, again, if no depreciation is charged, then there is no option. Nothing has been transferred and you have to debit entire 40 lakhs to the grant account. Okay, but assuming depreciation is charged, the dates are roughly not correct here. That is what I can say. Assuming they purchased the machinery and depreciation was charged, then we can consider that way. Okay. Borrowing cost is, see, for construction of factory building, you will take 60% of 5,50,000. No, so if depreciation was not charged, it has to be 40. Okay, if depreciation was not charged, it has to be 40. But that is not there in the option. Okay. All wrong answers only. Guys, I don't think all are wrong answer. One is where I made a mistake. Okay, I am also doing in a rush. But largely the answers are correct only. Okay, if you have any further questions, more than happy to respond to them in the comment section. Chalo, all the best for your next paper. You have 2 days of leave. After that, you can enjoy.